Now, the first benefit that I will talk about is buying a home with only 5% deposit and taking 95% loan without paying LMI. So basically, no LMI on 95% LVR. This is covered under the government scheme called Australian Government 5% Deposit Scheme. Now, to understand this scheme better, let me quickly explain LVR and LMI. LVR stands for loan to value ratio. The formula for this is the loan amount divided by the value of the property multiplied by 100. For example, if you are buying a property worth $500,000 and you are contributing $100,000 as a deposit and your loan amount is $400,000, then it is 80% LVR. Now, most lenders would lend you maximum 80% on most standard residential properties. And if you need to borrow more than 80% and you do not qualify for a government or lender scheme, then you need to pay LMI, that is Lender's Mortgage Insurance. Now, the cost of the LMI is based on the loan amount and LVR. The lesser the deposit, the higher the cost of LMI. You can pay LMI upfront or you can add it to your loan amount. But bear in mind that this insurance provides protection to lender only and not to you as the borrower. But say you are eligible for the first home guarantee scheme. Then you can buy the property of $500,000 with just 5% deposit. That is $25,000. And you can borrow the remaining 95%, that is $475,000 without paying any LMI. Now, I have used $500,000 just as an example. But there is a maximum property value or price cap applicable to this scheme. So, if you are buying a property in Sydney Metro or a major regional center like Newcastle, Lake Macquarie or Illawarra, then this property price cap is $1.5 million. The rest of New South Wales, this cap is at $800,000. Under this scheme, you can buy the property individually or jointly with a partner. And the partner can be anyone. Your fiance, your spouse, your friend, your sibling, parent, child, your cousin, does not matter who, as long as they fit into the same criteria of first home buyer. However, be careful and make sure that you get the legal advice because there are two types of ownership when you buy a property with someone. There is joint tenancy, where if one joint tenant dies, their share automatically transfers to the surviving tenant regardless of their will. And then there is tenants in common, where shares are transferred according to a will or probate with no automatic transfer to the surviving tenants. Please note that individuals cannot apply directly through the government for this scheme. To take the advantage of this scheme, applications must be submitted via the participating lenders approved by the Australian government. And here's some great news. The expanded home guarantee scheme, or the Australian Government 5% deposit scheme, has become even more accessible for buyers across Australia. There are now no place limits, meaning all eligible first home buyers can now apply without worrying about spots running out, which used to be the case before. The income caps have also been removed. Property price caps have increased in many areas, and access has been simplified in regional locations, with the regional first home buyer guarantee now folded into first home guarantee. These changes were introduced as part of the government's commitment to help more Australians into
home ownership.
An expert and vigilant mortgage broker like Ruben Sohana of Win Square Finance would know which lender has spots left under this scheme and what is your borrowing capacity with those particular lenders. Because remember, your borrowing capacity and acceptance of the income may vary from lender to lender. You can contact Ruben Sohana and his team at Win Square Finance to check your eligibility, discuss the qualifying criteria, and apply for the spot and pre-approval. Meetings can be conveniently conducted online from the comfort of your own home at a time that suits you best.